Traders, let's break it down. The two trades today that led to over 100 people in the Discord server having a green day. And by the way, these statistics here are mind-blowing. I took a poll at the end of our live trading session this morning. 117 traders reacted as green today. Only 7 reacted red. So that's less than 10% of all the people that voted that were red. And awesome. I love to see it. So what were the trades that were taken? Let's go straight to the day trade watch list. We had a short idea on SPY below $424. That was trade number 2. Apple, long idea over $174. That was trade number 1. So let's break down Apple first. What do we see? Well, it's a gap down day to begin with. All right. Gap down day to begin with. Now, we know that the ideal scenario, I've said this before, I'll say it again. The ideal scenario on a gap down day is an opening rally that gets sold. The reason why this is ideal is because if we have a gap down day, we don't want to see that gap down continue to fall at the open. It will just feel too extended. Understanding that there is an ebb and flow to the market, what we want to see is following a gap down day, a little bit of a rally to recover some of that gap down day, to ease some of that selling pressure, and then a rejection. So an opening rally, which we see here on Apple, that gets sold. If we look at Apple on the daily chart time frame, the setup here is A1. It's a range break down from all of this consolidation right here on the daily time frame below 174. So understanding that old support at 174 can become new resistance. That is why we said Apple is a long idea over 174. Now, this was intentional. I actually was not looking to take Apple long up into the range. My thought process with setting that trigger level back on the 5-minute time frame, my thought process with setting that trigger level at 174 was this. If we do get the opening rally that's going to get sold, it's most likely going to reject either at the previous day's closing price or at 174. Again, understanding old support on the daily at 174 can become new resistance. So the trade idea, moving to the 1-minute time frame, then looks like this. We get this opening rally. We've got the uptrend where we're connecting the opening move to the very first dip, and the uptrend kind of looks like this. We go short as close to the PDC as possible here. We almost top ticked this short entry. And what I wanted to do, I wish that I did, what I wanted to do though was get more size in on this trade. If this continued to push up, I was leaving myself room, so I entered with about 1/3 of the size that I normally would use in an effort to mitigate risk, I will admit, because there was no confirmation at this time that this was going to break down. So I entered in with a small size to mitigate risk in case this did push up. I was going to scale into the trade, lower my cost basis, and then look for the rejection. Unfortunately, we just never got the move higher for me to add more to this position. So we get the drop down, break of the uptrend trend line, rejection of the previous day's close, high volume here, selling pressure, drop down or offered 20%. And who am I to not take that 20%, right? If it's sitting there on the table, I'm going to take it. Now, what I was looking for was a continuation move down, yes, but I wanted to see a bit more of a rally here. So again, just that old support in this area becoming new resistance over here. I was looking to average or to go back in on this trade on a rally up a bit more higher, and then the drop. And we just didn't get it. We had the slightest 1-minute rally. So it was literally like close the position. I would have had to re-enter the position right away and then profit off of that. And I just, I wasn't prepared to do that because I thought it would rally higher. So I wound up missing this entire drop down because at this point it feels too extended. I'm not going to take it short while it's at the low of day because it could potentially bounce here. It never bounces, continues to fall. And, I'm just not going to chase the move. So 20% offered on the Apple short right here. And I saw a lot of you in the Profits channel actually post that you took the Apple short as well. Some of you held through, right? 50% gain there, 25%, 23%. So a few of you did, here's another one, 42%. A few of you did pretty well on the Apple trade. So that is why it was taken where it was, right? Opening gap down, rally gets sold, short near the PDC, also resistance on the daily chart time frame. Then we get the volume drop and we take the profits into the strength. Now the SPY trade, I could have executed this way better, but it was still something that was offered profits, and I can't complain. Green is green, right? Nobody ever went broke taking profits. So let's break it down. What we're looking at here is opening consolidation that is grinding higher, and then you get the volume drop. So very similar situation to Aapl, where you have this kind of like uptrend trend line, if you will, higher volume drop. That's going to let you know that the move is coming down. Now on the day trade watch list for SPY, we actually had a short idea below $424. But where we take the entry is above 424, and I'll explain why. So drop down here, bit of a rally, trying to hold this as a point of support, and then the failure. Realistically, I probably should have said, let's go short here on the retest of 425. Again, just following that same kind of methodology, support now becoming resistance on this candle right here. That would have been a really nice short entry. But we did not take that short entry. I was waiting to see if we were going to get the break of 424, and we do. So if SPY is a short below $424, you might ask, well, Gates, if we're taking it short, why not take it short here on this candle on the retest of 424? Okay, keep this in mind, write it down, make a mental note if you have to. The larger the initial move is, the larger you can expect the pullback to be. All right, so the larger the initial move is, this is a fairly large drop, right? The larger you can expect the pullback to be. So given the magnitude of this drop, I did not think that a pullback up to 424 was going to be enough. I thought that it was going to continue up beyond that, and it did. So we went short. What I decided to do then was, again, just old support, new resistance, right? Old support here, new resistance. Going short here made more sense to me at 424.5 with a stop at 425 for the move back lower. Now, as far as the profit taking goes, this is kind of where I skewed the trade or messed up the trade. I panicked sold a little bit out of this position. If I had just stayed a bit more patient, I did sell on this candle, but about halfway through. If I had stayed a bit more patient, I personally would have been would have had 20% profits on this. I took my profits at 15%. Reason being is because low of day is always a potential point of support. And again, what I say about this, the magnitude of this sell, right? It's already an aggressive sell-off. I wasn't sure if this was going to continue down from here after rallying up. So I thought maybe there was a chance that this was going to bounce at the low of day. And I wanted to just go ahead and take what was offered when it was offered. Like I said, if I had waited another 15 or 20 seconds, I would have had a 20% gain on this. Nonetheless, some of you did hold through and wound up taking your 20% on SPY short, right? It was only a 15% on there. Here we go, another 10% there, 15%. So we're mixed on the SPY trade, 20%, 20%. A few of you got the 20%. Some of you held through, got 30% plus. A few of you closed out like me at 15%. Either way, green is green. So closing at the low of day, not a bad idea when the profits are offered. Plus, we were coming off of the Aapl trade, which was already a 20% gain. We're just adding to the profits at this point. So two really nice trades, beautiful follow through. I mean, who knew that it was going to continue to sell like this? Nonetheless, I know it looks very minimal, the amount of profits that we got compared to the magnitude of this whole move, compared to what we could have got. But I think that in the long run, taking your profits when they're offered, instead of aiming for those home run trades, aiming for the base hit trades, the 15, 20, 25% gainers, that's the sweet spot. That's realistic to expect that every day. It's not so realistic to aim for 40, 50% plus. All right, so really proud of the team. I'm seeing a lot of focus on these trades. Congratulations to all, 117 members here that at least took part in this poll that were green today. Those of you that were red, review your trades. Go back and look at what you did and make sure you're journaling, and then also reviewing that journal and seeing how you could correct it. Okay, thank you so much for your time. If you've made it this far into the video, press that like button for me if you haven't done so already. It does help support this type of work that I do. If you haven't subscribed to the YouTube or the Instagram, but if you haven't subscribed to the YouTube channel, please do that for me as well. I put out really great content, and I don't know any other traders that's putting out information quite like me. Okay, again, thank you for your time. Enjoy the rest of your day, and I appreciate you watching. Take care.